Hello, good morning, ladies and gentlemen. How are you all doing today? And I welcome you to another promising session on my morning live. As usual, we are going to be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today during the UK and the New York session today. So with that being said here, first of all, I would like to confirm that if you have watched the videos in the that I published during the course of the weekend, well, the reason why I said you should watch this video is simply because it will serve as a background knowledge into how we got to the present point we are right now. And since what I'm going to be talking about during the live session today will basically be on the 1 hour time frame, and it is very, very important for you to have a background knowledge of how we got to this point so that you can also use your own discretion to make your own decision despite the information you have gathered here. So on that note, I welcome you once again to the morning live with Sheriff Daramola. And as usual, the first thing we normally do is to ensure that we keep tabs with the fundamentals so that we can be able to use it as a guide into taking a position ahead of the trading session. And you all know that this fundamental serves as a catalyst, bringing in some liquidity into the market so that it can drive price action in whatever direction we have positioned ourselves for. So when I looked at the economic calendar this morning, we really do not have any event to look out for today. Sorry, today is Tuesday, right? So let me bring this out. So for this week, so on Tuesday, we don't have any macroeconomic event to look forward to. However, yesterday's trading session, we anticipated the highest manufacturing PMI, which I told us all that it's an index that gives us a clue into the business condition in the US economy. And anything below the 50, the 0.50 is more or less not a positive thing for the dollar. And what we saw here coming in yesterday was 46.3, which was quite below expectation and giving us a variance of minus 3.39. We saw how the dollar yesterday nosedived to the downside. So with the situation we have here, we are going to be looking at the market this morning to see if the dollar does have any hope of rising at all, or we are going to be seeing the dollar continue to nosedive to the downside. So these are the things we are going to be looking at today. So with that being said here, let's dive into the current market structure. So as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil yesterday, we held on to a bullish bias on the oil, if you remember, after identifying this huge bullish gap which took about 48 pips. And this was a sign that there was a voluminous trading activity during the course of the weekend, which resulted into this move. And we also looked at the reason why we had this bullish move. Remember, I told us all yesterday that there was this OPEC Plus meeting that came up during the course of the weekend, and the decision to cut oil production was pledged upon, and this dovetailed to about I think 3.66 million barrels per day, which is a whooping 3.67% of the global oil demand. And for me, I'm of the opinion that we might be seeing oil prices skyrocket this week, but from the look of things in the last 24 hours, we can see that buyers are still finding it very difficult to gain that traction around the $80.50 level. As you can see here, the early hours of the week has been characterized by a lot of consolidation phase around that area. So let's run through what we saw here yesterday and how we anticipated to buy the US oil. So at the beginning of the week, we saw after this bullish gap was identified, we saw how price action transitioned into a consolidation phase where price action range between the $80.50 level and the $79 area, and this is more or less a sign that there is an indecision in this market. And I told us all yesterday that this current channel we identify here could probably transition into a reversal pattern where a breakdown of the $79 level could lead into a retracement of that impulsive move to the upside before we start seeing the second wave of that bullish momentum. But that did not happen actually, and what happened instead was price action triggering our buy stop order that was placed right above the $80.50 level. And if you are taking that move right there, you will currently be in profit, though the profit isn't that significant, but at least we are on the positive side of the market at this point. So currently, if you are taking advantage of that move, you would currently be running with about 50 pips in profit at this point. So I would advise us to remain patient at this point, as we need to continue to monitor price action around this area. But I'm of the opinion that anything could actually happen. This is a long consolidation phase here, which has lasted about 24 hours at this point. So in order to be able to feel comfortable in the buy position we had since yesterday, I was able to spot these higher lows. Here you can see that since the beginning of the week and after price action tested that $79 level, we have seen that price is yet to come back into that structure, but instead we have been witnessing higher lows in that regard. And as you can see here, you can see how price action has continued to gather momentum to the upside, though we really don't have that huge traction yet. But what we want to be doing now is to connect that series of higher lows, and definitely that will be our yardstick for trading activities going forward. So what I will be doing here is to connect the series of higher lows in this market, and we should be having something like this. Hold on a second. We are still going to be doing some adjustment when we bring back our candle chart, but using the line chart here, this is what we can find here, and this is looking more like a rising wedge pattern at this point, which still has a tendency of bringing in bearish momentum in this market. So what we are going to be doing is to use this bullish trend line as a yardstick for trading activity going forward. And what this simply means is that if price action continues to remain above that bullish trend line, we will feel comfortable in our buy position. But if the bullish trend line is breached to the downside and we start seeing sudden pressure resume below the structure, then we should be anticipating the beginning of a retracement phase in this market. And if you look at the structure here since yesterday, you would have observed that a retracement phase at this particular point is long overdue. So anything could actually happen around this area where price could breach the bullish trend line. Sorry, hold on a second, please. I just hold on a second. I had to attend to. Give me a moment, please. Alright, so sorry for the break in transmission. I had to sort out some power issues here, but we are fine right now and good to go. So here we are back on the chart. So like I was saying earlier, I was saying that we cannot ignore the potential of selling opportunity coming around this area, considering this new pattern that we are seeing here. And one of the reasons is this: the bullish momentum here appears to hold on a second. I hope you can see my screen, please. I want to ensure that you can see my screen. All right, so the bullish momentum here the traction for the bullish momentum isn't that impressive in the last 24 hours, even after it broke out that $80.50 level. And if we take into consideration the bullish trend line that I just identified here this morning, after connecting the series of higher lows here, you will see that we are beginning to see something that looks like a rising wedge, which has a tendency of bringing in a reversal pattern. Then the third one is the fact that, hold on a second. Okay, so the third one is the fact that we have been witnessing some selling pressure around that area at the $80.50 level. So there are still a tussle between the buyers and the sellers around this area. So let's keep in mind that a potential breakdown of that trend line might negate any bullish attempt here, where price could retrace back into the structure before another wave of bullish momentum happen. So this is what we shall be looking forward to today. So I hope that price action will continue to the upside. I still remain bullish here, but if anything otherwise happens, that is price breaches the bullish trend line, then we would have no choice than to start looking out for selling opportunity at the side of a breakdown of structure. Remember, we are not getting too excited at this point. When we cite the breakdown of structure, we want to wait for a confirmation to happen, which is likely going to come in the form of a retest of the trend line or the retest of the $80.50 level. We are selling pressure on our lower time frame will give us that confirmation to sell the US oil. But if price remains above the bullish trend line, we'll remain comfortable in our buy position, and we continue to look out for more opportunities to add more position to our existing trade. But be rest assured that I will be with you in the comment section on my TradingView platform as I continue and we continue to monitor price action together. So that is that on the US oil. If you have any questions, feel free to drop your enquiries in the comment section. So in that regard, I will be moving on to the next pair, and the next pair we are going to be deliberating on this morning is the GBPUSD. And on the GBPUSD here, in fact, you would agree with me that it must be very painful that we are not part of this bullish momentum yesterday, because of the bearish momentum I saw here. Saw this bearish trend line. I saw lower highs connecting the series of lower highs here. Price action breaking down the 1.23500 level. And we were thinking yesterday that price might likely come into the structure to incite a selling momentum, where the appearance of a reversal pattern around that area will incite the second wave of this bearish momentum to the downside. But unfortunately, that did not happen, as we saw price action break out of the structure and continue to ride to the upside. And one of the reasons why I wasn't keen on joining this bullish momentum was the fact that we have this strong selling niche here at around the 1.24200 area. So I was of the opinion that joining a bullish momentum around this area doesn't seem quite reasonable at that particular point in time, as you can see that we only have about 50 pips move into that selling niche before a potential rejection of that resistance level could happen again to send price crashing to the downside. So while we remain patient here, hoping that we will be seeing a reversal pattern, but unfortunately we didn't see any throughout the course of yesterday, hence I missed this particular move to the upside, which dovetailed to about 140 pips move. It was quite a significant move there. But for those who are taking advantage of this opportunity, well done to you for being on standby to have caught that move, as you will currently be running in significant profit at this point. But if you are with me on my TradingView platform, I shared an update this morning where, because of the continued buy pressure we have been witnessing here since the beginning of the week, I told us that we might be anticipating a breakout of that 1.2422 242200 level for a buy opportunity. You can see here yesterday we still was looking out for selling opportunities here, but that did not happen. So during the early hours of today, I shared this update here this morning. I said price action continues to find higher highs, hereby missing out on this bullish momentum. Now a breakout retest of the 1.24200 level will welcome buying opportunities today. So see you soon at the morning live. So I told us all on the chart right here, I made an illustration of buying the breakout of the 1.24220 level, and I hope that you are on standby to catch that move, as currently, as you can see right now, price action is running with about 50 pips in profit at this point. And if you are taking advantage of that opportunity, well done to you for being on standby to have caught that move. So what we want to be doing right now is to secure the current position by moving our stop loss accordingly to lock in some profit. At this point in time, I'm still very doubtful of this bullish momentum. So in the meantime, I will just place my stop loss somewhere right around that entry zone. It could be along the entry zone or just around or above that area to secure this current position as we continue to monitor price action around this area to decide if we are going to be adding more position to our existing trade here. And if you had missed out on this buy position here, there is still a chance that price action will give us a second entry. And what do I mean by that? If you look at the structure here, price action breaking out of a key significant level from a technical standpoint, whenever we have a breakout of a structure, obviously we expect price to at one point in time come back to retest the structure, which will also share a beautiful confluence with that bullish trend line that has been supporting bullish momentum since the beginning of last month. And if that is going to be the case, the resumption of buying pressure above this area on our lower time frame will definitely welcome additional position to our existing trade. So let's be on standby if that is going to be the case here. That is, if price action will drop into that structure, then you could take advantage of another opportunity in this market. So we continue to rather move all the way to the upside. And talking about our TP target here, what we want to be doing is to scale up into a much more higher time frame to see how we could actually leverage on this situation here. I think on our daily time frame, if you had watched my video on the GBPUSD, I acknowledge the strong selling niche around the 1.24500 level. As you can see here, since the month of December, this level has been a strong selling niche, and it appears we have price action trading just right above that level for the first time this year. In the last 4 to 5 months, this is the first time price action will be trading above that level. So we still need some confirmation to give us a clue that buyers are actually strong at this point in time. So let's continue to monitor price action here. Move your stop loss accordingly, lock in some profit. Then I'll be with you in the comment section on my TradingView platform to give you an update on what's to look out for if price action gives us anything different from what we talked about here. And then if price action drops below and selling pressure resumes back below the 1.2450 level, we would have no choice than to sell. So we are keeping all these options open as we continue to monitor price action. So if you have any question, feel free to drop your enquiries in the comment section, and I will be willing to be of help. So let's extend our TP target to, let's say, the 1.25600 level in the meantime, which will be dovetailing to about 150 pips in profit. So let's see how far this is going to go, and I will keep you updated in the comment section on my TradingView platform. So with that being said, here we shall be moving on to the next pair. And the next pair we are going to be looking at this morning is the XAUUSD. And on the XAUUSD right here, the week has started on a bearish note initially, as we saw price action started the week at around the 1,971 level, which happened to be the resistance line for the week at first. Then we had the support line here at the 1,957, where we saw the breakdown of the structure. And with the breakdown of the structure during the live session yesterday, we decided that a retest or selling pressure around this area or this level will welcome selling opportunities. But unfortunately for the sellers here, we saw how price action had continued to find higher highs in this market. And because of the situation here, what we thought about is that why not think of taking advantage of this bullish momentum? But one thing I noticed on the 30 minutes time frame yesterday, which I published on my TradingView platform, if you are with me on the TradingView platform, we saw the simple setup here where I made mention of the 1,965 level, which happens to be a key significant structure around this area. You can see how this level was a strong demand zone in the past. Then we saw the breakdown of the structure, and which from a technical standpoint, a theoretical perspective, whenever we cite a breakdown of structure, a retest of that level should be welcoming a sell position in this market. And we actually took advantage of this one right here, as we had a sell stop order triggered right below the structure and was taken out at a loss at that particular point in time. But with a buy stop order sitting above the 1,965 level, we got a buy position triggered here. So this is what I'm talking about here. I shared this on my public platform yesterday, so let's run through that and see things together. And okay, so this is what we were this was the update from our live session yesterday, where we were looking out for selling pressure anywhere around the 1,971. And unfortunately, with the look of things here, I quickly updated this with a 30 minutes outlook here, which revealed an important confluence around this area, where I said we could be selling below the structure, which we actually did, but price action took us out in a loss on that one. And then we looked out for another buy stop order above the 1,965. We triggered that buy position there, and price action continued actually to the upside, breaking out of that 1,965. Then we anticipated another breakout of the 1,980 as well. And as you can see here, we had a second position triggered as price action broke out of the 1,980. And not until the early hours of today, we saw selling pressure resume around the 1,990, taking us out of all the buy positions we had here. So I hope you moved your stop loss accordingly as price action moved in our favor. And if you did, you must have been in some profit and at the same time recoup the loss that we made after taking on that sell position earlier yesterday. So this morning I told us all that following a strong impulsive move to the upside, a simple setup is identified on the 30 minutes time frame. We shall expatiate on this during our live session today. So this is the 30 minutes time frame. So what I noticed here is a consolidation phase happening around here, just between the 1,009.8. So let me go into the live chat so that we can see things more clearly here. So I went on into the 30 minutes time frame to give us a clue into a potential trading opportunity here. Hold on a second, let me bring out the 30 minutes time frame. So here we are on the 30 minutes time frame, and this was what I was able to spot here on the 30 minutes time frame. After the early hours of today, we saw how price action was consolidating between the 1,982. Sorry, this is 1,978. Let me readjust this. So we have the 1,978 here. So we have this channel figured out at this point, and this more or less is an indecision phase in this market right now, where participants in this market are very indecisive at this point. So what we did here was to have a buy stop order above the 1,982 and a sell stop order below the 1,978 level for a trading opportunity. And if you had had your buy stop order above the 1,982, you would have had a buy position triggered right now, and you will currently be in a loss with about 20 pips or 18 pips in loss at this particular point in time. So we'll still continue to monitor price action here, and if it turns out to be that price action will break down the 1,978, then we already have a sell stop order there with the hopes that we will be able to scoop whatever loss we've had on this buy position. But if we also take into consideration what has been happening here since the New York session yesterday, we can see here that as soon as price got into that 1,990 level, we begin to see selling pressure where price action sellers we continue to find lower lows and lower highs, breaking down key structures like the 1,982, and the breakdown of the 1,978 will further confirm the presence of the sellers in this particular market. So let's continue to monitor price action here. We also have a trend line here that we shall be using to guide our trading activity for this week. And now that we have a breakout of the trend line, which from a technical standpoint is a strong bullish signal, so if we have a breakout, there is a likelihood that price will come back, retest the structure in anticipation of a trend continuation to the upside. So don't let's get too anxious about this momentum to the downside, even as we have a buy stop order triggered here. So there is still a chance that price could come back to retest the structure that was broken in anticipation of that trend continuation to the upside. So let's keep this option open too as well. But if price action takes us out of the buy position where it breaks down the 1,978 level, then we might be in for a wave of selling momentum here, where we have the options of adding more position if price action breaks down, retest the 1,971. So let's be on standby for these opportunities as we continue to monitor price action. So our center of focus for today remains just right around this channel. I will be giving you an update in the comment section on my TradingView platform as we continue to monitor price action here. So that is that on the XAUUSD. If you have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair right now, and that will be the last pair for today actually, and that is the USDJPY. So on the USDJPY, what was our expectations yesterday and what did we say the market do? So during the live session yesterday, we initially started the week on the bullish note. Remember, after we identified this channel between the 133.400 level and the 132.850 area, which was the support line of that channel. And you all know what we look out for whenever we have this kind of simple setup. We need a breakout or a breakdown of that channel for a signal for trading opportunities. Now we saw the breakout of the 133.400 level yesterday, which we actually took advantage of before the live session. But if you had missed it, I told us all that we might likely see price action come back into the structure where a reversal pattern here could incite another wave of bullish momentum. But unfortunately that did not happen here, and I immediately shared on my public platform that a breakdown of that 133.400 level will welcome a sell position. Let me show you quickly so that we can be on the same page here. So this is the USDJPY for yesterday, and I shared here that we shall be looking out for a break. Okay, this is it right here. So I said a breakdown of the 133.400, as you can see my illustration here, will welcome a sell position in this market. And we saw the breakdown retest of the 133.400 level, which triggered our sell position there, and we were able to rather move all the way as price action moved over 120 pips in our favor before the bullish momentum started. We also saw the second position triggered here too as well. Price action moved about 65 pips before the buy pressure resumed, hereby taking us out of all the sell position. And I'm very sure you must have moved your stop loss to lock in some profit like as I suggested here yesterday. So I said secure all sell position as sell stop orders get triggered at the key level. So secure sell position, I kept on mentioning this during the course of yesterday's trading session. So right now we have all our positions stopped out right now. And what is going to be our plans for today? Well, with a look at things right now, there is a buy pressure resuming in this market. As you can see, as soon as price got into that 132.250 area, we have been witnessing buy pressure around that area. And if we take into consideration the bullish trend line that was broken, hold on a second, I think I need to readjust this bullish trend line to fit in this current structure here. So if I do some readjustment, this is what we have here right now. And bring back our candle chart as bring back the candle chart so you can see. So with the citation of a breakdown of that bullish trend line here yesterday, we expect that from a technical standpoint that price might likely to come back to retest that structure in anticipation of a trend continuation to the downside. So this is a possibility that could happen in this market. So with the consolidation phase we notice here and price action being trapped between the 132.850 and the 132.500, all we just need to do right now is to remain very, very patient at this point, as we could have a bullish momentum come in where price action will get into the bullish trend that was broken yesterday, do some couple of rejection of that area to inside another wave of bearish momentum to the downside. So this needs a little bit more of attention. So what I shared here this morning is price action we should be waiting for a signal in the form of either a breakout retest of the 132.850 for buying opportunity or a breakdown of the 132.500 level for selling opportunity. Now, considering the situation of the breakdown of that bullish trend line, we shall not be having a buy stop order in this case, as we still need some confirmation to give us that confidence that buyers are actually strong in this market. And the only thing we are going to be looking out for right now is to see price action break out the structure, and then we scale down to our lower time frame to look out for a retest of this level, giving us a clue of the presence of buyers here, where attempt by the sellers to break back below the 132.850 will be negated by the buyers. And if this happens, we have that confirmation that we are good to buy. And when we buy above the 132.850 and as price continue to move in our favor, we want to be moving our stop loss to secure the current position, especially when price action gets into this trend line. We need to move our stop loss to our entry point, lock in this profit, and wait out and see how price action will be reacting to the structure to decide if we are going to be adding more buy position to our existing trade or getting ready to join a decline to the downside. And that is, if we see selling pressure resume around this area, we might be getting ready to sell. And one thing about that structure also is that it shares a confluence with that resistant line at the 133.400 level, where price action actually started rejecting the first time this week. So we have the 133.400 level, which is a strong selling niche in this market. So we might likely see price action reject that area. So that is why I said as soon as price gets into that structure, we move our stop loss to lock in some profit, and this appearance of sudden pressure on our lower time frame will definitely trigger an opportunity to sell. However, if price action breaks above the bullish trend line, breaks above the 133.400 level, and then we start seeing buy pressure resume above the structure, then we might be in for another wave of bullish momentum. So this is how we want to be trading this if we have a breakout of the 132.850. So right now we can see our price action is currently trading above the 132.850. And to further make things clear, let's scale down to a much more lower time frame, like the 15 minutes time frame, to see how we could actually take advantage of a trading opportunity there. So hold on a second, let's scale down to the 15 minutes time frame. And hold on, I want to, okay, Okay, this is the 132.850. So we are going to be looking at the 132.850 on the 15 minutes time frame. Okay, so this is the 15 minutes time frame. Bring out our line chart, and then we identify, okay, this is the 132.850 here, where price appeared to have broken out of that structure. And here we go. 132.850 level figured out here. We already have a breakout of that structure, and in addition to the 132.850, we also have a structure here at the 132.980, I guess 980. Okay, so we have that. I'll place it at the top right hand side of my screen. So we have something like this now. So we have two structures here that will support a bullish momentum at this point. So personally, I will advise us to just remain patient. So we want to see breakout. In fact, I will need a breakout of the 132.980 to happen, taking out the sell positions here. Then if price action drops back into structure, or the structure here where we start seeing buy pressure resume, then we will be in for a bullish momentum in this market. So this is what we are going to be looking out for to buy the USDJPY for today. Now, to sell the USDJPY, we have a support line here which has been consistent since the early hours of today. And if we bring out the line chart and connect that structure, we have something around the 132.600 level, which is also a strong psychological area considering the round figure of that price. So we have the 132.600 here. So what this simply means is that if instead price action takes out the buy positions here below the 132.650, then we might be in for a selling opportunity in this market. So let's keep this in mind, screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. So we have a sell breakdown retest of that structure, and we want to be buying the breakout retest of the 132.980 level. So we have the breakout retest of that structure. So this is what we shall be looking out for on the USDJPY for today. So I hope I made myself clear, and I am very sure we are well equipped to be part of this trading opportunity on this pair. Now, in addition to that structure, we need something that we shall be using to feel comfortable in whatever position we are in, and that is this bullish trend line here after connecting the series of higher lows in this market. So what this simply means is that as long as price remain above that bullish trend line, we shall feel comfortable in our buy position. So at this point, we might want to join the bullish momentum here anytime, since we have a bullish trend line here. So you can join the bullish trend line, then you have your stop loss somewhere right around that right around the support line here at the 132.600, which will be dovetailing to about 26 pips in stop loss for this current position here. And then let's see how far this momentum is going to go. But if price action takes us out of the buy position in such a way that it breaks down the bullish trend line, then we might be in for a selling opportunity in this market. So let's be on standby to catch any of this opportunity when the market presents it to us. So on this note, I want to call it a day here. It has been a wonderful moment, and I wish you best of luck during the UK and the New York session today. And be rest assured that I will be with you in the comment section on my TradingView platform to give you an update on what my expectations are within the current structures that we just reviewed during the morning live session. So do have a wonderful evening, everyone, and bye bye.